Oh, yeah, Peter, I got to believe that with the amount of debt that the United States has and the amount of money that we owe and the way we continue to run a deficit, there's no way that the taxes can't not go up. They have to go up.
Well, we've got a big task, as we do every year about this time. It's coming up, it's looming ahead of us. We're going to be talking about it today on Financial Focus. It's on everybody's to-do list. And John Kuykendall, founder, CEO of GulfCoast Financial Services, is going to help us keep financially focused on those tasks ahead so that we can make the best choices with our money. As a reminder, GulfCoast Financial Services has been named Best of the Best in Financial Services by the readers of the Lake City Reporter 10 straight years and running. And John, I think it's because you help savers and investors stay proactive and stay so financially focused. Now we've got that tax season looming.
Well, Peter, there's nothing we can do about it. It's coming. We put it off all year long. It's not in our mind because as we get paid, they take out taxes. And so all of a sudden, the end of the year, we have to worry about how much money am I going to due the government April 15th. And so we have to start working on that. And unfortunately, we procrastinate all year long. And that's one of the things that we try to do here, Peter, is we try to get our clients to do tax planning.
Yeah.
We want them to figure out how much money I'm going to have to pay next year, and then what can I do to, I'm still going to have to pay, but how do I do it so that I don't have to pay more than I need
Yeah.
to? And that's hard.
I got one of my forms like remarkably fast. I think it's the earliest I've ever gotten a form. January 2nd, I had one of my forms.
Wow.
But John, sometimes those forms can really linger out. So we want to wait for all of those to come in before filing, because we don't want to have to go back and undo or redo or refile things. And looking at April 15th coming up, and saying, well, I've got to file my taxes. That's not what you're talking about with tax planning, right?
No. Tax preparation is what we do to fix our taxes to figure out how much we owe and how much I'm going to have to pay on April 15th. Tax planning is what we do prior to that, the 12 months before that, so that we can eliminate or at least help to preserve our capital by not paying any more taxes than we need to. And Peter, I've talked many times about it on the show about the little lady who came in and wanted to take $10,000 out of her account in November for plants in her yard. And, I said, well, wait a minute, let's look at this and run it through the number cruncher. And when we got it up on our tax clarity software, that $10,000 was going to cost her an additional $4,000 in taxes. Now, we could wait till January, take the money out of the IRA, and then pay it the next year. And we had more time to plan that year. That's what I'm talking about with tax planning. Tax planning is doing those kind of things to make sure we don't make a mistake, and that I'm prepared the best I can for the next year. And very few people do tax planning.
So what we owe this year, that's tax filing, that's history,
Right.
That's based on last year.
Yeah,
The future depends on tax planning, and tax planning and tax preparation. Obviously, they are different. Both are important if we want to stay out of trouble and as efficient and effective as possible. Then tax planning is really necessary.
Tax planning is necessary because, in retirement, we don't have that paycheck coming in every week. We're automatically, our money's being taken out and sent to the government. And then at the end of the year, we owe a small amount or we get a refund. With tax planning, we're looking at all the ways in retirement that our money's coming in and what can I do to save on taxes. Taxes is the number one expense in retirement. And we need to do everything we can to do what we can to minimize that, but at the same time, pay what we're due.
Now, John, that comment that taxes are the number one expense in retirement, is that actually as a result of the way that we have been saving for retirement along the way? So in other words, could we maybe control and minimize that bill a little bit with this effective tax planning?
Well, that's right, Peter. And don't forget, there are a lot of things in retirement that are affected by how much money we make and therefore how much taxes we owe. We can end up paying more for Medicare Part B. Up to 85% of our Social Security can be taxed. So there are things that we need to do for tax planning so that we can minimize all those things that might affect us. And that's one thing we look at here at GulfCoast Financial when we talk about tax planning is we want to know where you are, how far you can go before we hit that next level that's going to create more expense for your Medicare Part B, and also more expenses on your how much your Social Security is taxed. So we're looking at all those things when we do that, and that's why we do tax planning. It's not, it's not something that everybody likes to talk about, but we have to do it.
Yeah. Well, we'll talk about the double, the triple, the quadruple whammies there that you talked about with Social Security, Medicare, and the implications of those tax hits and penalties in just a moment, the surcharges and all of that. But I want to hone in on, you said taxes based on how much we make. And I just want to clarify, like somebody could say, well, in retirement, I won't be making anything, right? But withdrawals from tax deferred retirement accounts, John, that's essentially the same thing as brand new income being taxed.
Oh, yeah. Yeah. I mean, as we take that money out, and don't forget, when we reach a certain age, we have that required minimum distribution, which we have to take out whether we want it or not. So all that money that's been deferred has to come back. The government is your partner in your deferred accounts. They own a piece of that deferred account. You can say, well, I've got $1 million in my 401k. You really have about 700,000 because 30% of it belongs to the government.
Yeah.
So, it's not like I've got all that money. And we have to plan for those things, Peter, in retirement.
Well, I know that there has been talk about the taxation on Social Security. Maybe that's something that politicians want to address. I don't know the likelihood of that happening, but it's been talked about. But John, is there anything else that says retirees are automatically at lower tax rates or in lower tax brackets? Are taxes lower in retirement? Like we've been told and taught to save in those tax deferred accounts, or has that been kind of a fallacy?
Well, Peter, I think there's two fallacies. One is that in retirement, taxes aren't cheaper. I mean, we still have the same subject to the same tax tables, and we're still subject to having to have enough money to live on. And as inflation and cost of living, and the more active we are, the more money we have to make or we take out of our accounts in order to live. So really taxes aren't cheaper. The other thing is that we were always told that when you retired, you could probably live on 70% of what you were making.
Right.
That ain't true, Peter. It takes 110% of what you were making to live.
Well, because of that inflation you mentioned.
Yeah.
And then I know that I'm either at work earning money or out in the world spending money. And in retirement, right? Where are we at? We're out in the world spending, and every day is sort of a Saturday on vacation.
That's right. I mean, what are you going to do? You got to play golf. You got to go places. You have to do things. You're not going to work. And so therefore you spend more money. Now you don't spend it on clothes and stuff like that, but you spend it on going, doing things, enjoying yourself. And that's the kind of retirement we want to have. We don't want to have the retirement where I have to sit home and not do anything.
Yeah. Now, John, I mean, the act of filing taxes during our working career, it's a pretty routine and repetitive task, right? We got our documents, we put the numbers in the right boxes, and our software or our accountant will help us lead through that process. But retirement's a completely different set of circumstances, different sources of income. Are the first few years of retirement usually a matter and a process of refiguring things out? Is this like a new tax experience for fresh retirees?
Well, sure, because as you said, when we're working, the money's coming out of our check. We really don't see it. We really don't know what tax bracket we're in. We really don't do any tax planning as such. What we do is we try to do investments so that we can make them tax free or tax deferred. So in retirement, because we are living off of what we saved, and so many things, Peter, as we just talked about a minute ago, so many things are impacted by how much money we make and how we do things. The stock that you bought at 10 and now it's $100 a share. When you sell it, you have capital gains. That's income. That affects how much you're going to pay in taxes. You sell your house and move to a smaller home. Anything over 500,000 for a couple is capital gains. And so we have to do that. There's all kinds of myriads of things that impact us in retirement that we didn't think about while we were working. It didn't impact us.
And then there's kind of a cumulative effect of all of these things. And those are the double and triple and quadruple whammies we're talking about. Because we're making withdrawals of taxable income from retirement accounts, that can cause the Social Security to become taxable or become more taxable, crossing certain thresholds. That can cause our Medicare premiums to be more expensive. That can cause us to cross certain thresholds with the capital gains tax rate. So
Correct.
this is where tax planning really shows its value, right, John?
Well, Peter, it's not simple. I mean, when as I was getting older, I thought when you reached 65 and got on Social Security and Medicare, you were kind of home free. Well, that's not the case. I mean, there are traps and roadblocks all along the way that we have to navigate. And so if you don't do tax planning, if you don't get with someone who can explain all these things to you and help you navigate them, then you're going to end up paying more for everything. I mean, Medicare Part B could be up to over $500 each for a couple.
Per person, yeah,
If
per
you're
month.
not, yeah, per month. And it's not the fact that my wife made this and I made this, it's couple because
Yeah.
we're filing jointly. So, you have to be careful on how you handle all this.
Well, John, you've been talking on this program for a long time, extended period here about this window of opportunity with the 2017 Tax Cuts and Jobs Act, and that it expires at the end of this year. Now, again, we've heard talk from politicians that that might get extended. So maybe there's a chance of that. But don't we need to continue to behave and act and plan as though this window of opportunity is here and we should seize the moment on that? Like, is that not something that we should be paying attention to and planning around?
Oh, yeah, Peter, I got to believe that with the amount of debt that the United States has and the amount of money that we owe and the way we continue to run a deficit, there's no way that the taxes can't not go up. They have to go up. We have to raise more income. There's only two ways the government can raise money: taxes and printing. They can't print anymore. They printed all of it they got.
They can. They can, John.
Oh, well, they can. Oh, we got to pay for that debt or nobody buys it.
But that's where inflation comes from, right?
Yeah. Well, that's right. And so what we need to do is we need to be planning for higher taxes, even though 2017 that tax act may get extended. At some point down the road, we're going to see higher taxes. We're going to see indexed for Social Security. You're going to get your Social Security based upon how much you make and how much of it's taxable. Some people won't have to pay taxes. Other people will. It's just the way the world is going, and we have to plan for it. And that's one thing we try to do with our clients is be aware of those changes and then start implementing through Roth conversions, through life insurance, other things that we can do so that we can help them, kind of navigate this thing down the road, because those required minimum distributions, you may not want the money, but you have to take it and you have to pay taxes on it. And don't forget that when it passes to your heirs, except for your spouse, they've got to take it out over 10 years.
Yep.
And so, they're going to have a tremendous whammy on their side. So we need to do everything we can, Peter, to do tax planning. It's just not something that it's kind of like income planning. We're not used to it. It's something that's new, and we need to be more proactive with it.
Yeah. And that's one of the things that you and your team there at GulfCoast Financial Services have done with and for your clients for quite some time. You've helped so many throughout North Central Florida, but so many more need this kind of proactive guidance to make the most of each and every one of our dollars. We all need to be doing that. So ladies and gentlemen, if you've not had a proactive look at not only your investments, not only your plan for retirement, but the tax implications of where your money is and how you plan to access and withdraw it, give GulfCoast Financial Services a call, 386-755-9018. 386-755-9018. Now, John, on one hand, we have tax filing. On the other hand, we have tax planning, and we're talking about the difference here. But when we file our taxes, the goal is to pay as little as possible. As we are tax planning, the goal is to pay as little as possible. Since taxes are a pay me now or pay me later system, are those two things kind of conflicting?
Well, I think they are, Peter, but really they're basically the same. I mean, I'm still trying to pay as little as I can, but it's different ways that we plan for it, whether I'm planning for it while I'm working or whether I'm planning for it after I'm retired. When I'm working, I've got a few more deductions. I've probably got kids at home. I've got my money's being taken out every month or every week when I get paid. When we get retired, we forget that some of the stuff that we're coming in, maybe the distributions from our IRA, maybe our Social Security, we're not paying taxes on that. And so we're going to have to pay those taxes down the road. But really, the whole thing, the whole key to this is income planning. Because if I can plan my income and plan my sales of my appreciated stock, plan my withdrawals from my IRAs, I can control what I'm paying in taxes and also what I'm having to pay for Medicare and how much of my Social Security is taxed. So it's really the same thing. It's just we need to do it more often in retirement, I think.
And John, you've mentioned that the traditional 401k, the tax deferred IRA, those, in fact, your IRA is an IOU to the IRS, a ticking tax time bomb. What you're talking about here is those different buckets, the tax qualification that we put on our money. Essentially, the analogy we've talked about is you can break that down into different buckets, and the goal is to move the dollars to the most efficient bucket possible. But that's a process that takes careful planning and examination because of all that is involved.
Well, that's right, Peter. And it's easier to do those Roth conversions and to move the money into different buckets prior to age 65. So, when we're 60 to 65 is an ideal time to start moving the stuff around. And if we need to do that planning, but certainly, yes, it is a situation where we have this IOU to the IRS, and we have to figure out how I'm going to handle that and handle it most efficiently. When, we talk about capital gains, the rate's based on income. So I need to control my income to control my capital gains. There's just all kinds of things that we need to look at.
We want to try to departner the IRS from our retirement accounts as much as possible. And John, a couple other important times of note where tax planning really shows its value. Number one, if we do plan on retiring before age 65 or before age 59 and a half, like at those times, if those are our goals, tax planning really becomes essential at a much earlier stage, correct?
Correct. I mean, yeah, we need to have that done a long time before. We need to have an income plan done too, so that we'll know how much income I'm going to need it whenever I'm thinking, if you want to retire at 55, we need to know how you're going to live and how much money you're going to need and where we're going to get that money and how much money we need to save prior to that and how we need to save it in a Roth or in a regular 401 so that we can maximize your retirement later. I mean, it's just the whole thing kind of goes together, Peter, but it's just more complicated than I ever thought it would be. And it's something that we're not taught.
Yeah.
I mean, we just haven't had enough education on all the things that can happen to us in retirement.
Yeah. The teaching has been set up your 401k, defer and delay paying the taxes, right? And maybe that is in hindsight, not a mistake to do that, but maybe we need to rethink some of that logic in those teachings. And particularly, John, again, now a great time because of our historically low tax rates, but also another window of opportunity. If we are in the red zone between age 59 and a half, where we can take those in-service distributions all the way up until they've extended it now, all the way up until 73, when the IRS requires those distributions. That really is probably the most critical time, would you say, to do effective tax planning?
Well, yeah, I think that, it's really from 60 to 65. But we can still do it after that. We just have to be aware that I'm going to do it for the benefit of my taxes later, but I'm going to have to pay more for my Medicare Part B now.
Yeah.
And Peter, that's hard to get people to understand. I mean, I just did a Roth conversion with a client who's 68 and not subject to minimum distributions. And I had to sit down and convince him that it was better to pay the higher IRMA, as we call it, for the Medicare Part B for a year than it was not to go ahead and convert that money over so that we didn't have to pay taxes on it later, and it wasn't subject to required minimum distributions. So that's just another reason we need to get it out.
But that is a case-by-case kind of consideration.
Case by case thing.
Yeah. Well, taxes are a pain. They are a thorn in all of our side. I don't think anybody is feeling real bad for Juan Soto. I heard a recent analysis of the amount of taxes he's going to owe on that ridiculous baseball contract he just signed. But if we could be efficient, we all would like to be. I'm sure Juan included. And paying taxes does mean you made money, but I still hear, good problem to have. There's still the word problem in there that we all, I think, want to address. So not planning ahead for taxes is really not understanding in full how taxes work and will impact you in retirement. John, that's a goal of you and your team there at GulfCoast Financial Services. You want your clients to have a clear understanding of not only the assets, not only the investments, but the taxes, the income implications, all of that. And that's why you put together those financially focused written retirement plans.
Well, that's right, Peter. Don't forget that Juan is doing tax planning. So
I'm certain.
He's got people that are working on that around the clock.
Yeah.
And so while his
if they could save just a portion of the $350 million that I heard he was going to owe in taxes, I'm sure it would be well worth it.
Oh, it'd be well worth it. And it's well worth it for us too, because we're going to need every dollar we can get in retirement. Trust me, it's not cheaper. It's not easier. It's just costs more and it's harder. And if you want a retirement that's going to last and you're not going to be living with the kids, which none of us want, and the kids don't want us either. So you might as well do tax planning, income planning, so that we can give you the retirement you need.
Yeah. Well, specifically, if you would like to learn how to retire and pay less in taxes, give GulfCoast Financial Services, John Kuykendall, a call, 386-755-9018, 386-755-9018. You can go online, gulfcoastfinancial.net, gulfcoastfinancial.net. John, taxes, just another reason why quitting is for winners, but retirement is not for wimps.
That's right, Peter. And that is really a good book you need to get.
Yeah. Of course, copies of that available there at GulfCoast Financial Services or by calling the number. Give John Kuykendall, Financial Focus, and GulfCoast Financial Services a call. You can receive a copy of the book, Quitting is for Winners, but Retirement is Not for Wimps, 386-755-9018. John, always a pleasure having you here on the program, keeping us financially focused.
Thank you, Peter. Great to be here. See you next week.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through GulfCoast Financial Services Inc., a registered investment advisor in Florida. GulfCoast Financial Services Inc. is not affiliated with Kovac Securities Inc. or Kovac Advisors Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions. GulfCoast Financial Services Inc. has been named as Best of the Best since 2015 in the category of Best Financial Advisor in the Lake City, Florida area. The award was based on receiving the most votes in this category from a survey offered and tabulated by the Lake City Reporter. No direct or indirect compensation was provided to the Lake City Reporter and/or any raters, and the award is not contingent on future direct or indirect compensation offered to the newspaper and/or raters. Portfolio performance is not a criterion, and voting is open to any readers of the newspaper.